you want to be able to have an asset that is pegged to a currency that you understand, whether that's asset-backed or that's algorithmic or synthetic. Most people understand what $1 means.
Stablecoins are extraordinarily important with their ecosystem, and that we all work together in order to ensure that the user experience for everyone coming into Cardano would be the best it possibly can be.
It's not just a stablecoin liquidity issue that I think we're suffering from right now, it's a user issue. It's something that I think we all need to put our collective heads together and start to solve. Indigo, as you know, is a permissionless DeFi protocol, right? So our approach to barriers was to erode them. I think we're uniquely positioned to scale infinitely with the demand.
One by one, we are trying to at least solve the distribution angle, because if we are there on the centralized exchanges, we would be able to bring in liquidity from other ecosystems. It's a discussion about governance, it's a discussion about compliances, it's discussion about education, it's discussion about distribution, and it's discussion about getting to the end user and making it seamless for them to get in and out of the ecosystem.
Stablecoins are one of the most important building blocks for Web3, providing stability in an otherwise volatile market and acting as a bridge between traditional finance and decentralized ecosystems. On Cardano, they're especially vital, powering DeFi and creating the confidence needed for users and institutions alike to participate. But we're still in the early days. Different designs, fiat-backed, crypto-collateralized, algorithmic, synthetic, each come with trade-offs and opportunities. And the path to deeper adoption on Cardano depends on how well these models deliver real-world utility, drive on-chain liquidity, and maintain trust. That's why I'm really pleased to be joined today by the teams behind 4 of Cardano's leading stablecoin initiatives: USDM, USDA, Coty's Djed, and Indigo with iUSD. Now, each is taking a different approach, but all share the same goal: driving the stablecoin space forwards and helping Cardano realize its potential as a foundation for a more sustainable, decentralized economy. Gentlemen, thank you very much for joining me. Now, perhaps we can start with some introductions to yourselves and your projects.
Hi, everybody. My name is Shantanu. Very nice to meet you all, and thank you for the invite. I am the acting CEO for Amzens. Amzens is operating in about 14 US states right now. We are authorized to provide our services in 17. We are working with best of the providers in the industry. So BitGo is our custodian on the fiat side of the business. We use TRM Labs for coin monitoring, SummonSub for KYC and KYB verification. The idea is very simple. Our idea is to empower the DeFi ecosystem on Cardano and integrate Web2 with the Web3 world using USDA as a way to do settlements. And very pleased to be here tonight.
Yeah, thank you. My name is Joshua Maddox. I'm CEPO for Cody, leading ecosystem and partnerships. And Cody is the creator of Djed on Cardano, which is an algorithmic over-collateralized stablecoin. Cody itself is a privacy chain that leverages a technique called garbled circuits to basically create fast, inexpensive privacy at speed and cost efficiency in a regulatory compliant way for the first time on a public blockchain.
Hi, my name is James. I am with USDM. We are a fiat-backed stablecoin here on Cardano. I am the business development lead and one of the founding members. We've been in existence for approximately 19 months now, and we are serving the Cardano community within the DeFi ecosystem and beyond.
Gentlemen, thanks for having me today. I'm Eric Coley. I'm the director at the Indigo Foundation. The Indigo Foundation represents the Indigo DAO in the real world, which is the controlling entity, if you will, of the Indigo protocol. Indigo protocol has been live on Cardano now for almost 3 years. We'll have our 3rd anniversary here in November. We launched in November 22. Indigo at its core is a synthetic asset protocol. We give Cardano, through Cardano native token exposure to non-native assets such as Bitcoin, Ethereum, Solana, any real world asset. Discussion topic today, obviously, is stablecoins. So we have our flagship asset, iUSD, which is a digital asset backed over collateralized stablecoin. So thanks for having me.
Great. So thanks very much for coming. Now, let's start by keeping things super simple. What exactly is a stablecoin, and why do stablecoins matter in a Web3 ecosystem like Cardano? Maybe let's have James take that one first, and then I'd love to hear from all of you.
So for me, I love to keep it very simple. A stablecoin or a fiat-backed stablecoin, or stablecoins in general, are a simple share or store of value. It's a digital representation of, for us, a fiat dollar that is currently housed in a bank account. And then with us, we have a third-party attestation that's included into that with on-chain verification. From there, it allows for basically agency or digital freedom for a end user to be able to use within a dApp protocol. Let's say like a lending and borrowing, you can get a general yield, or within a DEX where you can pair it up with another token. And then also allows from the business side, the ability to be able for token providers or token dApp holders or dApp builders, to actually then pair their token with a stablecoin. For the most part, it just creates agency for the end user.
I think one of the, when you ask what a stable coin is, it's really, I think as James said earlier, a store of value, but I think it's real kind of prime use, at least in the blockchain, at least how it got started was, you want to be able to have an asset that is pegged to a currency that you understand, whether that's asset backed or that's algorithmic or synthetic. You want to be able to understand the value, especially inside of a pool. Against another asset that you may be trading for. And so a very simple use of this is most people understand what $1 means. So if I have a pool with ADA on one side and quote unquote $1 or a stable coin of that value on the other side, it just simplifies the user experience. So I think a big chunk of it started off as really UI for blockchain. But now it also provides, a range of ways that people can, kind of stay on the blockchain without having to go through a fiat on and off ramp to be able to stay inside their ecosystem, whether I want to do remittances or payments. But especially if I just want to exit out of a certain asset into a dollar denominated, digital asset, then I can reuse that and don't have to come off the blockchain into a fiat rail.
So stablecoins are often seen as kind of the lifeblood of DeFi in particular. Shantanu, why do you think that is? And what's the particular importance of stablecoins to that part of the ecosystem?
Specifically in the DeFi ecosystem, what really needs to happen is we need to provide safety to the users. In the traditional world, there are various ways a user can reduce the risk. In the DeFi ecosystem, a stablecoin is extremely critical because you are able to reduce your risk. If you're holding asset A and you want to move to an asset class which is stable in value. And just to expand further, what I mean stable in value is when you combine anything which is pegged, it could be gold, it could be dollars, it could be any fiat currency, and you have got governance and technology combined, that is what gives more definition and depth to it. And this is how we at least are seeing adding value to the DeFi ecosystem. The other advantage also, as James mentioned earlier, on the decentralized finance, if decentralized finance has to expand further, it has to grow to masses, specifically in the frontier markets. Stablecoins, it's got a great role to play. Of course, we'll get to the ways how stablecoins can gain more traction, but specifically on empowering the global DeFi adoption, stablecoins needs to be there to reduce the risk and to add more financial products against a more stable asset, which maintains the value.
Just to echo Shantanu's sentiment, DeFi users particularly desire their transactions denominated in a stable currency. So what we saw with Cardano, for example, the infancy of a lot of our DeFi platforms and the infancy of stablecoin solutions on Cardano, many platforms were still denominated in ADA, understandably, as we were kind of real young and continuing to grow in that evolution arc of kind of growing out our stablecoin solutions. Well, denomination in a volatile asset is difficult and challenging for the user base itself, right? So stablecoins are critical for user experience and ensuring that they can plan and project financials as best as possible with stablecoin solutions.
And Tim, if I could add something to what Eric said having to do with usability, just having to do with minimizing slippage within a particular ecosystem in DeFi would be extraordinarily helpful. dApp scaling, that would then, facilitate dApp scaling. And then from there, easier to manage the pair positions that you have. In order to move in and out, we need to be able to have enough liquidity in the market in order to do 1,000 or 10,000 or 50,000 size trade and without a large amount of slippage. And currently it's untenable.
Now, as much as we're all friends here, we do in effect have competing approaches in the room. We've got synthetics, we've got fiat dollar backed, we've got over-collateralized algorithmic, but it'd be great to hear a bit more from each of you about why the particular design decision to go in the direction you did was chosen. Let's start with Joshua. Tell us a bit more about Djed and how that works, and then we'll move on to the rest of you.
Sure, thank you. So, as mentioned earlier, Djed is an over-collateralized algorithmic stablecoin. We're over-collateralized anywhere between 400 to 800%. How it works is we peg it to the USD, and then it's backed by ADA. So $1 of Djed equals $1 of ADA at any given point. We've chosen to make an over-collateralized algorithmic stablecoin for several reasons. One is it's more capital efficient, and now I think we need fiat-backed stablecoins, so I'm not knocking at all that pattern. But you kind of have a scale factor of 1 when you have a fiat-backed stablecoin. That means if you deposit $1 as collateral, you receive $1 of stablecoin. So algorithmic stablecoins have a higher scale factor, but with that scale factor, you end up, adding on potentially more risk since they require larger scale trust and that stability model. And that's where we add something called Shin, and really to help out that stability model and make sure that we never lose our peg. So we've been around for about 2 years. And, during that 2 years, we haven't really lost that peg. And the way it works is if we're below 400% in terms of over collateralization, then we prevent the burning of Shin. And we prevent the minting of new Djed. If we're over 800% over collateralized, then we prevent minting Shin, and mint and burn of new Djed is then allowed. Shin holders then get like a range of benefits by holding Shin. They get delegation rewards. They get mint and burn fees from both Djed and Shin. And then they can take that Shin and use it as like LP rewards, farming rewards from DEXs, etc. It's really just a way of making sure that we have a higher scale factor, but also we reduce that risk that typically comes with algorithmic stablecoins by making sure that we've accounted for the way that some algorithmic stablecoins in the past have depegged.
So James, obviously USDM follows a slightly more conventional model, I suppose you could say, but tell us a bit more about the design decisions that you've made.
So it was really designed after what USDC was doing. So we really didn't try and reinvent the wheel when it comes to that, legally, as well as just the way the entire thing's set up. So it's set up so that the bank account itself that holds the assets that are under management that are representing the physical or the digital dollar in the ecosystem, that is bankruptcy remote. That was by design in order to ensure that if anything were to happen to the parent company in any way, that any of the user funds will always be safe. The other side of that is that, of course, it's fiat backed. And the third part of that was extraordinarily important to us, is that we had third party attestation. So there was no idea of trusting us in order for us to supply what we have in assets under management. And from there, it is then actually then reported daily at 6 o'clock, Monday through Friday on USD Stream on X. And then you could also find it on Charlie 3 as well. So this allows for a pretty unique design setup that follows an already beaten path from a very large stablecoin that's done very well. At the same time, I do believe that the other stablecoins are extraordinarily important within our ecosystem, and that we all work together in order to ensure that the user experience for everyone coming into Cardano would be the best it possibly can be.
So we'll dive into that a little bit more next. But before we do, Shantanu, tell us a little bit more about USDA.
Actually, I would echo almost everything that James said. But our pedigree is fiat, or this is what we did for almost a decade. And our intention was to make sure that we start with off-ramps, which is the most difficult product. Like, when you specifically build products around DeFi. And this is something that I wanted to do for almost 8-9 years, like 2017, 18, I worked out on something. And what at that time we were doing was we were using Bitcoin as a way to settle. And of course, as we know, because of the value keeps fluctuating, this was a great opportunity for us to take over the project from the guys who were doing previously. Since we had the fiat rails in place, and specifically in the frontier markets, it personally matched with our vision of bringing stablecoins at a fair price to the end users. In my personal opinion, if stablecoins or if crypto as an ecosystem needs to grow today, what we need is fair pricing for the end user, specifically in the frontier markets. If a user gets their stablecoin at a 4, 5, 6, 7% premium, we are not really solving any problem. Since we got these rails in place, we saw a wonderful opportunity of launching this stablecoin, and of course, regulatory compliant and proper governance in place was really the key reason for us. At no given point in time, USDA or ANSENS is ever a custodian of the user's fund. Therefore, we have got a custodian, which is BitGo, very similar, again, bankruptcy remote. And at the same time, the users get their own sub-accounts as well, where they make dollar deposits, and they only can mint what they have deposited. And there is no way for us to touch the user's fund. So, which means that it provides a complete safety and security to the end user when they are using us. Again, very similar to what the USDM guys are doing at the moment. Just an additional point is the fiat liquidity. Just stablecoin on its own is pretty much not so usable. And our intent was to make sure that we are able to provide banking as one of the additional benefits to our end users. And probably we'll dig more deep into the details as the conversation goes on.
Great. Now, Eric, of course, Indigo is all about synthetics. Tell us about your approach.
So, when Indigo came online in November of 22, we were one of the first full suite DeFi platforms, and we saw, based on the construct of the system itself and how we offer synthetic assets, that we had a unique ability to offer a stablecoin solution as well. So again, as I mentioned earlier, iUSD is digital asset backed. Currently that's ADA and over collateralized. So we've gone from the version 1 of the system to version 2 to now 2.1, even though it's 2.1, it really is version 3, and introduced a multitude of different parameters so as to help maintain PEG. As Joshua was talking about earlier, PEG is critical for stablecoin solutions. For those of you that have been around long enough, we're no stranger to a DPEG instance, right? So iUSD from end of 23 into 2024, because we were still in that version 1 instance of the system, we had relatively low barriers, and we were not with the current state of parameters that we have now. We had a DPEG based on the dynamics of the market. We've introduced 2 new systems since then, a multitude of parameters to help maintain that PEG. And I think what we've seen over the last year plus now is iUSD, even though it is a over collateralized digital asset backed stablecoin, not fiat redeemable, it has maintained its PEG quite well, even with the best of these guys, our colleagues here. And I want to also add that, oftentimes we get looked at as, a competitor to our fiat backed or our algorithmic colleagues. Ultimately, that's not the case at all. We're all complementary solutions. You see what's going on right now in our DEXs with stable pools. That only helps anchor both stablecoins PEG on either side, ultimately. And then, of course, in a DeFi platform like Indigo, where we're trying to give users exposure to synthetic assets, having USDA, USDM, perhaps Djed as collateral assets, which will be coming in our actual V3 of the system, those are even further utility and use case for our colleagues here.
So obviously one of the challenges that's often spoken about is the relatively low stablecoin liquidity on Cardano. James, what does that mean in real terms for the user and for the health of DeFi?
So what it really means for the end user is they struggle with the ability to be able to move more than, say, 500 to 1,000 of a particular token. Once it goes beyond that, it depends on the pair. Some pairs even worse. And then from there, you're looking anywhere from 10 to 15 to upwards of 20% of your value in the swap. And that's just in one hop. And people normally do more than one. So the ability to be able to bring liquidity into the market, I really think, is a level up, a tide that raises all boats. From there, we will start to see the quality UX or user experience for every dApp that's currently operating within our space at a much higher level. We would then start to see more and more interactions with iUSD, with Djed, with USDA and the USDM pair that's currently over in MinSwap now, which is the first V2 that we currently have with very limited fee or low fee and super low slippage. The only issue is that it's really just one-on-one. It's its own island with USDA and USDM. We need more interactions, more pairs outside of what we currently have in order to create that real unique user experience that all dApps can then build on.
It's not just a stablecoin liquidity issue that I think we're suffering from right now. It's a user issue. One of the things I'd like to point out in that in November of 2024, when ADA went up to somewhere around $1.30, A lot of us were looking at the valuation of the Cardano ecosystem's TVL nearing $1 billion, and we were pretty excited about that. Yet at the very same time, what was actually happening was attrition of our user base. That's a startling statistic and fact, because we're seeing user base issue, we're seeing a volume issue, we're seeing users going to other chains. We have to solve the user issue. We have to bring users here. And with that, organically will be a deepening liquidity of our stablecoin solutions. I pretty strongly feel that. So it's not just a stablecoin liquidity issue. It's how do we solve getting users here to Cardano? How do we incentivize that? How do we bridge them with viable EVM solutions and EVM bridges? I think we have a much larger issue than just a stablecoin liquidity issue. And I think we could rabbit hole on that for quite a while. I don't know that this is the forum for it, but it's something that I think we all need to put our collective heads together and start to solve, because it's the very real, higher, larger solution, or rather issue in my mind, that we need a solution to.
Yeah, I think piggybacking off of what James and Eric both said, I think, as we begin to fix that UI UX and allow people to, enter and exit positions at an affordable rate, then, people are going to be more interested in coming over. But I think also as we see a tighter and tighter squeeze on sort of the APY, the APY that people used to be in crypto and blockchain for just isn't there in large part. And that's one of the other uses of stablecoin, right? When it's backed and it's bearing yield, et cetera. If that yield isn't going to the entity, but if it's going to end users. So I think as we begin to see, stablecoins that are bearing yield, or some part of that entity that is bearing yield for users, also allowing that depth to allow for people to have that better UX experience. And we're going to see more of those users that Eric is talking about coming in. But until then, they're going to go to places where they have less fees and they can get a better effective yield, even if the yield is the same. If the fees are lower, the effective yield is worse.
So let's actually broaden it out a little, and let's talk about users and use cases beyond DeFi. Shantanu, what are some of the other use cases that you see, either existing or emergent for stablecoins?
If you go onto the Answers website, the keyword for us is settlements. And we see stablecoins playing a very, very critical role when it comes to settlements. Now, these settlements can be cross-border. I don't know what's wrong with the stablecoin companies globally. I'm not talking about just us, but outside, everybody talks about remittances. And I touched upon this point. A stablecoin at the retail level is pretty much not so good in the Web2 world, because the cost of acquisition of a stablecoin is very, very high. And the cost to get out of the stablecoin ecosystem back to fiat is, again, very, very high. So at least I can talk on what Ansons is aiming to achieve right now. We look forward to do a pilot for a payments company wherein USDA can be used as a tool for settlements. If you look at a broader picture today, any company that is moving money, either intercompany or from one institution to another for a cross-border payment, the challenge what they're facing is liquidity. If I can have an additional minute, I can quickly explain through an example what I mean to say. If I'm a remittance company A and I am interacting with remittance company B in, let's say, in the Philippines, the challenge that the remittance company is facing today is they are having to pre-fund these remittances that they're sending from country A to country B. That really creates a problem for remittance company A, because they have to block their liquidity with the payout provider so that the payout provider in the Philippines can actually be paying out these transactions. With the inception and with the introduction of stablecoin into this business model, actually can really unlock the liquidity for 3 working days, which is a lot of capital for any, think about somebody who is sending $10 million a day from country A to country B. And this is, I was really surprised to look at some numbers a couple of weeks back when I was chatting with the remittance provider. On a daily basis, they were minting $28 million worth of stablecoin of one of the top 2. And what I was really imagining at that time, and they're only minting, they're not burning any money, any stable coins. So for us as a stable coin operator, we are operating in the regulated space. We are providing solutions which can be audited. So really the space is anybody who can integrate the gap between Web 2 and Web 3 companies. So basically for us, the vision is move money on blockchain and bridge the gap between Web 2 and Web 3.
Now, you mentioned regulation there, of course, and the world of regulated private stablecoins is another area that's being explored and investigated fairly widely. Joshua, perhaps you can tell us more about privacy and stablecoins. We've moved quite a long way from the world of Monero and Zcash.
Yeah, that's right. Look, I think that the world needs regulatory compliant privacy on stablecoins for a range of reasons. If you just think of a very simple like base case, most of the Web3 companies that I know do not pay their own staff in stablecoin. And you have to ask like why that is. Like why aren't staff being paid? Why aren't we eating our own dog food essentially? And it's because, we don't want to reveal people's salaries on a monthly basis to the world. Our staff and our employees have right to privacy, all of these other things. And you also don't want, if you are going to move stablecoins to payments, you don't want every payment that you make to be open to the world. I think if any of us was asked to expose our complete bank account to the world, we would laugh at people and be like, why are you asking me to do that? So we are not going to see stablecoins used as payments until a privacy solution, and more important, a regulatory compliant solution that is fast, cheap, and light is there. So Kadi we've announced that we're going to do a wrapped version of Djed on Kadi. So they'll be on Kadi's privacy layer. They'll be powered by garbled circuits that enables that fast, cheap, light, scalable privacy. And that'll turn Djed into a privacy-first financial primitive, and that can operate at speed and cost efficiency. We are also going to be doing private Djed on Cardano. That'll be native on Cardano, and that'll be a native stable asset infrastructure, but that'll be private Djed, and that'll ensure that that foundation is ready when we see that next wave of adoption. And I think we can start to see those types of use cases for the first time as something that can drive a lot of scale of not only Djed, but also USDM and anybody else that's using those kind of like privacy features on Cardano. Wouldn't it be nice if everybody started paying their staff in the currencies that we're all creating? And then finally, we also announced that we'll also be deploying a wrapped version of private Djed on Midnight, collaborating with them. And that'll be a privacy-focused sidechain developed for Cardano, and Midnight's confidential smart contracts. Will make that a great home for privacy-first applications. So we'll see all three of those cases coming out soon. I think we'll see a lot of demand for Djed increase, but also a lot of new use cases that just weren't previously possible.
I just echo what Joshua was saying, having to do with why aren't we paying people in the stablecoins, and say a stablecoin company that would be paying their employees in it, and it's simply because they don't want the amount of money that they're making on an annual basis out there in the public, which makes no sense. We currently are working with Midnight now on the technical requirements document for Shield USD. I know it's not something I'm giving up. We haven't really done a lot of marketing on this yet, and there hasn't been a lot of fanfare, but Shield USD will be the initial stablecoin at our fiat-backed stablecoin at that time that will allow for anyone to be able to interact with it that's working on Midnight. This will then allow for a variety of things at the settlement layer, which will be absolutely amazing. The other really exciting thing I think about Midnight is that selective disclosure having to do with medical records, things of that nature, the ability to be able to give the user back their data in order to have that, the self-sovereignty that we all speak of or talk about, that agency that we speak of or talk about. And then from there, educate everybody on just don't click that box and give away your data, every little bit of your data. Every time you visit a website, right? So if we could start to move back away from that and give everybody back their data, which is valuable, and then from there they can then have that agency that they should have.
So when looking at stablecoin adoption, I'd love to hear from you where you feel the greatest barriers are around implementation and adoption. Are they sitting in the regulatory domain? Is it more around awareness, the technical challenges?
Indigo, as you know, is a permissionless DeFi protocol, right? So our approach to barriers was to erode them. Anybody can have exposure to iUSD with a Cardano native wallet and internet. So unlike some of our colleagues here that might have geo barriers, KYC, KYB barriers, all of which are really appropriate for their particular solutions, ours is quite a bit different. So when we talk about scalability, and earlier I mentioned the multitude of parameters that we've introduced including a unique redemption feature. We really have what we need in place, what we feel is in place in order for iUSD to scale, expand, or contract with the growing demands of the market or the lowering demands of the market based on what kind of cycle we're in. So, when it comes to scalability, I think we're uniquely positioned to scale infinitely with the demand. We're 24/7, 365. So when we talk about barriers, quite frankly, the only ones we have are a user's internet access and whether or not they have Cardano native wallet. So
yeah, I think I could tee off of that from Eric in the boundaries. Geofence is definitely something that you have to deal with early on, especially with MTLs and licensing within the US and outside the US. That's why we partnered with MBX, which is a centralized exchange, which is a rather unique partnership. But because of the way they are set up, they have legal authority to be able to operate and onboard anybody into the MBX platform and be able to mint no matter where they're at outside of New York State. And of course, the OFAC countries like Russia, China, North Korea, things of that nature. So the barrier there has been reduced quite a bit over the last 6 months. And we've been able to do a lot of work there in order to be able to onboard people. Outside of that, I'd say the barrier to entry is education. When we're thinking about DeFi, when we're working within DeFi protocols, when we're working within dApps, what I've noticed is that they're more focused on the tech and getting out utility and less focused on the education and explaining to people how it actually works. So that's somewhere that we've been really focusing on lately. I've been really kind of championing that within all of the different dApp founders and working on their marketing and promotion along with their education, which should dovetail nicely within what they're doing in order to onboard new users. Hopefully from there, we can then showcase just exactly why it is that Cardano is such a great place in order to operate a DeFi dApp, and then why end users would want to come over and actually use it.
And Tim, if I may carry forward just on the point related to education, for us, education continues to play a big role. Now, this is more so with the Web2 companies. As we are approaching more and more Web2 companies who are doing settlements, either internal or external, it is extremely important for us to educate them the use of blockchain in their day-to-day business, how it can reduce cost. I mean, one of the payments company recently came out with this numbers, and they saved $128 million over 12 months by consuming a big stablecoin for their banking. And this is just savings in the banking cost. So we need more and more participants in the Web2 world to actually come up with the case studies and the numbers to showcase like this is what the stablecoin as a business brings to them. For us, the intention is everything on Cardano. Of course, we all know the benefits of using Cardano. So this is where we have been trying to pilot the project with the payment and the telcos, because they are the ones who are involved in the regular flow of funds. The second area, at least, where we still struggle and trying to find a better solution is in distribution to Web3 companies. As we would want to get access to a large number of audience, the challenge that we end up facing is the support for CNTs continues to be limited with wallet providers and exchanges. What that means is either we end up paying money from our pocket to get CNTs supported by these exchanges and wallet providers, or we all come together and we say that we will together bring in more value to the other ecosystems. When I say ecosystem, I mean to say wallets, MPC wallet operators, and exchanges. So one by one, we are trying to at least solve the distribution angle, because if we are there on the centralized exchanges, as an example, we would be able to bring in liquidity from other ecosystems. So this is at least what we did. We paired up against USDT. The good news is it's not a huge number, but we traded about $1.4 million in the last 20 days. But the good news is, again, to extend this, that we moved liquidity from another ecosystem outside Cardano. I mean, if USDA, USDM, Djed, for example, if we are trading with each other, literally it's just money exchanging. It's just money being exchanged from one pocket to another within the same ecosystem. So if we can look at distribution and work towards it together, we should think about getting the money from our other ecosystems into Cardano.
And to touch on that a little bit, what Shantanu was talking about having to do with other pairs. So currently, USDM is paired up with USDC, USDT, BTC over on NBX. Now, the transaction volume is light there, the user count is light there, but literally they have everything that a large centralized exchange offers. It can do anything that a large centralized exchange can currently do. The only thing that they don't have is a huge user base. So it's something to have like a really cool tool that you wouldn't be able to access simply because you don't hit the number necessary for USDT, USDC, or any Binance or a Coinbase for us to be able to even operate there and offer pair, right? So the beauty of that is it gives us a little bit more leverage. The outside of that is that what iUSD is doing with the wrapped products that they currently have. I know there's quite a few within our ecosystem that are currently using that now and that utility, and it's interacting with what we're doing with the fiat-backed stables as well. So there's already synergies happening. We just need to explore and expand those.
Yeah, I completely agree with what James and I think other people said. I think everyone kind of touched on it, but I think the biggest kind of like barriers continue to be fragmentation and also regulation. And, there's basically a 5 to 6% premium, depending on the day and what T-bills are trading at on depth. So, people rush into USDC and USDT and not knocking either one of those products, but you're effectively giving them a loan every time you, get USDT or USDC. And so, why are we giving companies a loan and allowing them to make, I think close to 40 billion was one of the numbers I saw. And you have everyone rushing now. That regulation is starting to become more clear in the US with the Genius Act. You see everyone is now starting a stablecoin company. And I think the reason why everyone's starting a stablecoin company because they know that it's only so long that people are going to be willing to offer that, I say 3 to 6% loan, depending on the day, to other stablecoin operators. So we do definitely need to reduce that fragmentation, and regulation, I think, will help us with that because it's been unclear whether we're a money market fund or whether you're a deposit or a security or an unregulated token. And when banks aren't allowed to touch and help create that depth and help work with other stable coins, et cetera, because of those unclear rules or like slow fiat on and off ramps, then you're going to continue to see everyone stay with the major providers just because that 3 to 6% premium is there for safety.
If I may, I know this is a little bit of a rabbit hole. It's not an agenda discussion topic, but I come from the Web 2 enterprise tech world, and I've been in that space for 18 years, and I've seen bleeding edge tech and the introduction of it. And oftentimes what happens is you see this new tech get introduced, every company, it's a rush out of the gates for every company to offer this. And then what you see is this saturation of solutions, and then there's a great consolidation, mergers and acquisitions across the board. It's really, really common. And then there'll be this multi-month, perhaps multi-year prolonged phase of a consolidation effort where all these companies someone gobbles them all up. And, it's interesting to me to see, as Joshua was saying, all these companies coming out to be stablecoin issuers of some sort. I wonder if what we'll see in the future is some sort of consolidation. It's an interesting thought. Time will tell. And again, I know it's a little bit of a rabbit hole, but it's something for us to consider here as we're more, frankly, we're first mover advantage in a lot of ways. We're initially bleeding edge of what the Web3 space is looking at from stablecoins, and certainly what Web2 is looking to come to and kind of participate in. So it'll be interesting to see kind of what the evolution is of the stablecoin space.
Yeah, I think, Eric, the one thing that's interesting about that is that, there more than likely will be M&A period within the stablecoin industry. And the other side of that is that with USDT, I believe started the layer 0 type of effect, which is something that Matt talked about last year in Dubai. This was something that was absolutely needed, and then creates a layer to where every single stablecoin could interact or operate depending on their, circulating supply. I would imagine there's an over under on all of that as far as being accepted into that thing. But then from there, we'll have NFX for stablecoins in order to be able to swap in and out of on a regular basis. At that point, I think we've arrived on the digital side of things, and we can move on to other stuff.
So let's double click a bit more into that kind of competition theme. Now, obviously, Cardano is very lucky to have a very healthy stable, pun intended, of its own native coins. But how do you see your different protocols competing with that wider world? We're obviously all aware of Circle, USDC, USDT, and indeed many more are being issued by the day. But how do you see your protocols competing, especially in a world of increasing interoperability between chains?
I think that all for us, it all depends on the success of Cardano and its user base. If we increase our overall user base and bring a bunch of people in, then from there that use USDM or USDA or iUSD or DGED will then be able to be used outside of our space on a regular basis because people will be asking for it. They will need it or want it. And that's really the whole point of everything, I think. Currently, whenever we're talking to anybody, they're always looking as to how to extract value out. We're trying to bring value in. How do we do that? We increase the overall viability of the stablecoins that we currently have on chain. We make the dApps that are currently here give more and more utility, better use case, and actually things that we can sell. Not 23%. I'm afraid that APR is just way too high for anybody to pitch to anybody without, with any real teeth to get anybody to come in. No one will use that. If we can start to add real fixed APR loans out to people, this will exponentially grow our market as well, simply because it's cheap money going into the market. So at this point, I think that we grow our ecosystem here first. Then we start to think about outside how that looks like within the larger ecosystem. But at the same time, what Shantanu brings with the remittance side, the ability to be able to fiat on-ramps and his speciality there, I think between the four of us, we have everything that we absolutely need in order to be able to grow this market within Cardano and compete outside of it.
Tim, if I may take over, because James touched upon it. And exactly, James, as you rightly said, the intention should also be like we should first build on Cardano. And really, we should get as I was mentioning before, stablecoins adds more value in the frontier markets. It stabilizes the currency. Like if you look at Turkish lira, for example, in the last 10 years, Turkish lira has devalued by over 92%. Now, it's a combination of everything that we have discussed here. It's a discussion about governance. It's a discussion about compliances. It's discussion about education. It's discussion about distribution. And it's discussion about getting to the end user and making it seamless for them to get in and out of the ecosystem. If the users in these growing economies, they're aware about the risk that they have by holding their national currencies versus holding a digital dollar in their wallets, for example, and whenever they need the money, if they can get an access to all their off ramps, like let's say in Turkish lira or Nigerian naira, Indian rupee, which is devalued by over 10% in the last year or so. So at the end of the day, a combination of what four of us are doing here, and of course, what Cardano as an ecosystem, as the blockchain is delivering in terms of value, this will be a great help, in my opinion, to the mankind.
I think we've heard some great answers. I think, Sean too mentioned something very important earlier, and that is, cost. I think to be able to see people start using this for payments, obviously cost is going to be a major factor. I think two other things that will, be of benefit is, we've recently announced that alongside IOG that we're going to begin open sourcing Djed, and initially what that means is that developers will be able to come in and kind of like build out custom front ends for Djed. They'll be able to integrate Djed functionality into wallets and dApps directly, in a permissionless way. They'll be able to run back-end services to interact securely with Djed. And then once it's fully open source, that means that builders can come in, take the code, and create their own versions, kind of set their own fees, and really start to experiment with the use of stablecoin. I think having kind of novel use cases and novel functionality can be an attractant. And once we have that attractant, and there's, we see people doing novel things on the, kind of bleeding edge, but also on the front lines of where people are actually using stable coins and they lack functionality that they need, whether it be something like what Shantu mentioned earlier about pricing, or whether it's something else. And then, as we've already mentioned, I think the other piece is definitely privacy. Obviously we're biased in that regard, but I think until there's privacy, you just cannot have, major use of stable coins, both from a regulatory perspective, but also from a UX perspective.
Thanks, Joshua. Now, I want to give each of you a final word. Shantanu, what's next for USDA, and what's your message to the community?
First of all, my request to the community is get onboarded with Ansons, give it a try. Not just us, but we all need the community to participate. Till the time the Cardano community starts to participate, I'm afraid we'll not see immediate value to the whole ecosystem. At least on our side, we have divided the Ansons vertical into a Web 2 and a Web 3 vertical. And I'm kind of in the middle between Web 2 and Web 3. So on the Web 3 side of things, we are focusing on taking USDA onto the centralized exchanges. We are going to be making some more announcements in the next few weeks about pairing with non-Cardano and Cardano tokens, pairing against USDC and USDT. I don't know if you read this announcement, but USDT to USDA today is at zero fee, and we are inviting projects. So on the Web3 side of things, we would want more and more projects to build their liquidity on centralized exchanges against us. On the payment side of things, we are rolling out more off-ramp countries. So we currently can off-ramp USDA back to dollars and then dollars back to about 46 fiat currencies globally. We want to expand that to almost 72 countries before the end of this year. And we are going to be adding alternate payment methods like e-wallets, which would make the product more desirable and usable in the frontier markets. We'll also be focusing on our mobile app. So currently we are on the Android store, as well as about 8 countries, I think, on the iOS. So we want to expand that further and provide more wallet support to the end users so that the distribution point gets covered. We get off-ramping at a competitive price. In the next 8 to 10 months, we are also focusing on the on-ramps with encryptors, which again is part of what we do. We have tied up with telecom operators in Africa and Latin America, wherein we are actually integrating on-ramping capabilities for encryptors. What that means is instead of Visa and MasterCard, which is extremely expensive in these markets, the users would be able to get into the USDA ecosystem at less than half the price to what they are paying today. And this is a need as a user that we have understood for some time. On the Web2 side of things, we are aiming, as I mentioned earlier, pilot USDA as a settlement currency between the payment institutions. We look forward to do this pilot in the next 6 months, hopefully. A part of that would also mean that we would be educating our partners. And there are 2 types of focus that we have in the Web2 world. One of the companies, as I mentioned, is a payments company, and the other company is an institution that is moving money from one location to another. Both these institutions are a part of this specific company. So we would aim to establish and showcase how stablecoins can be used for settlements, and not just at a retail level, but at an institutional level. So these are the core focus areas for us in the next 8 to 10 months from now.
James, what's next for you?
USDM's currently been working on a variety of things. One that's really exciting is what we're working on with our strategic partner, MBX. Now, it's very similar to what Shantanu was just alluding to, having to do with both virtual and the ability to be able to just on-ramp, off-ramp into fiat. And that will be happening very shortly. I don't want to preempt their announcement. I will allow them to make that. But that should be coming up in the next 90 days. So be on the lookout for that. We also have V2, which is coming out very shortly. Andrew has been working very hard on that in the back end, and we are very close to getting that done as well, and it looks amazing. From there, we are just furthering our work and efforts in working with every single dApp and founder that's currently within our space, either already within MAP or those who have not yet launched. And we will continue on working with that in order to ensure that USDM is placed, and then working on the branding, within our own ecosystem. And then from there, once we work out the circulating supply problem that we currently have in our space, and I know me and Eric could both get into a discussion about that at any point. But at the same time, I think it's important that our end users have or know that we have their back. And this is a big topic for everybody right now, that we will be able to get that pretty quickly. That should be coming with the stablecoin proposal that Elder has put out, that Charles was championing as the Cardano Sovereign Wealth Fund. So make sure if you're a DREP, look into that and leave comments, and please give us your vote, or give Elder your vote, I should say.
And Eric?
Well, a lot of different areas that we're focused on. One in particular, I mentioned earlier, though we're on system 2.1, it is really V3. So we have a new system coming online that we're currently in development on. and it's going to be labeled V3. So I know that's confusing, but it's the 4th iteration of the system. Ultimately, what we're introducing, in addition to other expansion of the product suite, is the multi-collateral feature that I mentioned earlier. So this just gives even further utility and use case for our colleagues here, as we, assuming, in theory that the DAO approves this, is a whitelisting of these stablecoin solutions as collateral assets in the system, and also XBTC. So we've been working really closely with your colleagues, Tim, at IO, that are championing and building out the Bitcoin DeFi solution. So we're working very closely with them as to what the product spec would look like, for solution spec would look like, rather for it to be a viable solution for the Cardano ecosystem, and in particular, a DeFi platform like Indigo. So we're really excited about that. Assuming we can get a robust and viable solution shipped out here that supports Bitcoin DeFi, we'll be at the forefront of that, and hopefully bring even more liquidity over here in addition to users like we were discussing earlier. So we're looking at that as a really exciting new development for Indigo, in addition to other bolt-on features that will be live by the end of the year. Ultimately, what we want Indigo to really look like is a DeFi hub for our users of the Indigo and Indigo system and the DeFi ecosystem as a whole in Cardano. We want people to really exist within the single pane of glass for Indigo. So integrations are going to be robust. Solutions for really just a multitude of different use cases, rather than just synthetic assets, but really attaching kind of this bolt-on kind of approach to different features, not just a full suite rollout like V3, but we have LRP and Multiply coming out that will allow users one-click leverage. We've seen that there's a lot of demand for that in the ecosystem and DeFi as a whole. So Indigo is very exciting future ahead, and we're looking forward to it.
Joshua, I'll let you bring it home. Final thoughts or messages to the community?
Brilliant. Yeah. The final shout outs, we're focused on 3 things: open sourcing, privacy, and community building. And I think our shout out is really Kadi got its start in Cardano community. And even though, Kadi has its own L2 now, the overlap of our community is immense. And I think we see that with, our excitement and willingness, on open sourcing, but also bringing privacy, not only with Djed onto Midnight and Cardano and on Kadi, because I think between Midnight, Cardano, and Kadi, it's a lot of the same community, but we also have, bits of our own community. Soon we're launching, Kadi Earn, which is a platform that we're looking forward to bringing, kind of like rewards for people to be able to come and participate in some of these privacy initiatives that we're talking about. And I think part of the bridge building is also making sure that as Djed gets wrapped and put onto Kadi, that begins to create transaction volume on Cardano as well, as we begin to natively bring privacy to Cardano from privacy on demand from the Kadi ecosystem that gives new use cases on Cardano. And as we begin to collaborate with Midnight on privacy, I think we also see that transaction volume created on Cardano, but then also created in concert with the broader kind of community. And huge thanks also to James and Eric and Shantanu for being on the call. I do think that rising tide lifts all boats, and I think it's good that we have such a strong, and as you said it earlier, Tim, I do like the pun, such a strong stable of people in the community who are building, and we look forward to continuing that, that ethos and way of being inside the Cardano community.
And on that note, what a perfect time to draw things to a close. Gentlemen, thank you very much for joining me. James, Eric, Joshua, Shantanu, great conversation. And I think probably the first of many within the ecosystem over the months ahead. Thank you very much for joining, and we'll see you soon.